Greetings, greetings, greetings. You are now tuned into the vault. Trust Christian, own nothing, control everything. Just want to thank you for tuning in live, listening to replay. Always appreciate everybody that tunes in live, listens in the replay. This is the vault, episode 472. FDIC 250K rule for depositors equals investors. So we're definitely, not legal advice, not financial advice, but always want to have an open conversation with people that listen to the vault. These are the situations that you make more than $250,000 a year, let alone have $250,000 in investment. Sounds like you were out of luck. What's interesting is that when you read these rules, the FDIC rules, we see that there's some banks that have gone under, whether they're crypto majority holding bank, transaction institution, or even with a when you look at one of the major institutions in a foreign jurisdiction outside the United States, this institution is trading for less than $2 in the States and literally had a capital infusion, whether it's from outside investors. You saw American institutions, states institutions from the United States say, hey, we're not going to bail out these institutions. So now you got who's coming in? Major institutions still came in, put some money with this bank, and now you see that if you made more than $250,000 to that institution, if you hold more money than 250K in an institution, are you a depositor or are you an investor? And these are the questions that people ask themselves when they're saying, I don't want to make more money. That's what they say. People say things like that. Oh, I don't want to make more money. Why would they want to make more money? When you hear that a bank's not going to insure your savings, now you see why we talk about after you do asset protection training with the vault, Christian at trustchristian.com. That's the email. You get to asset preservation. You got to preserve the money, not necessarily because it might be losing value to inflation, but let's just look at it from the perspective where the bank says, hey, we're not going to insure more than $250,000. This is the bank telling you that when you deposit the money. So how do you get around these situations? Well, clearly these institutions have gotten bailed out. They've gotten bailed out by other banks. Say, hey, we're going to put some deposits with you. So now what makes the person that deposited the money an investor? Why wouldn't they be an investor? The reason why you got bailed out, the reason why people got bailed out is because these other institutions see that as a buying opportunity. That's really what it is. It's a buying opportunity. And that's really what just happened. Whether people want to say it or not, oh, why would they deposit money with an outside institution other than for leverage? We can get more upside with their bank right now than we can with our own. Otherwise, we would stay in house. Clearly, that is the reason. It's not a reason of why not let these institutions go under. Institutions can go under. It's okay for an institution to go under, but clearly, you see that other institutions don't see that as a reason to buy. They bought the upside, possibly long term plays in these institutions. But let's go back to the depositor. Oh, the depositor's $250,000 rule. If you have $250,000 of money deposited at an institution, the public insurance policy is that you're insured up to 250. But what happens after 250? Where's that money go? What happens? Will I ever recover? Is it accounted for? You ready? Here's what the bank has called it in the public sector. The bank in the public sector is now calling it unrealized gains. Oh, wow. Hypothecation. They 10x'd my money. They were making loans out with my money. But oh, no, no. After $250,000, if I hold money there, It's called the unrealized gain. Oh, really? These are the things that you have to deal with as a so-called depositor dealing with these things, and it just depends on the position that you're dealing with them in. We definitely wanted to talk about this subject because it's in the universe right now. Is maybe something we've seen throughout the years for many years, where you see institutions go under, but we're definitely seeing where there are major institutions right now, and we wouldn't call them too major, but they are major when you talk about some of them. They're international, major international, and so when you see institutions that say, "Oh, we're going through whether you want to call it a bankruptcy, a chapter XYZ," what did they do? These people, we don't want to say mismanaged, but we definitely will say that when you look across the board, even the rule in place, it leaves a level of uncertainty amongst the depositors. And secondly, once the company bails in their depositors, not they might have got bailed out, but they bailed in the depositors, and now they're. Why wouldn't the depositors be collateral? And the reason why we can say, hey, we do have assets. What assets does the bank have if it doesn't have the deposits? So once again, unrealized gains is after $250,000. So sure, it could leave people in a conundrum. This is where we're going to go deep with it now. So this is where we see these millionaires sit on the internet, or people say that they're millionaires sitting on the internet, and they don't talk about this right here. But let's just think about this, ladies and gentlemen. If you were a so-called millionaire and you had more than $250,000 sitting in an account in that particular bank, they just called it an unrealized gain, which is a write-off on the books. So where are we at with this whole situation, where we see that these institutions may not give you the insurance that you need, quote unquote, but up to 250K. Once again, after 250K, what is that called? And no one seems to know in the public, but they're saying it loud and clear. It's called the unrealized gain. That's what they're calling it. They're saying, hey, look, we took some losses, we made some bad investments. That means they took your money, they made some bad investments, and now after 250, they were betting on that too. The whole time. Okay. Well, if they were betting on that to happen, not that they wanted it to, because then that means it's negligence, it's malfeasance, and that goes against the public rule. The public rule is, look, we at least got to ensure the small guy up to 250, and even after 250, where are you at? Are you insured? Why aren't you taken care of? Why aren't you insured? Oh man, you don't need the insurance. No, this is what happens when people get in these rarefied airs. This rule is neither here nor there. Just like the bank wants to call it an unrealized gain, it could be the same thing for you. Same thing for individuals, same thing for anybody. It's and it's not legal advice, financial advice, but it's one of those conversations we're having in the public about, once again, it's unrealized gain for businesses. That's what they're calling it. You go back, you start watching the news, you start tapping in, you're hearing what they're saying. Oh, well, our depositors, we how do we insure them after 250? We got to get outside funds. We got to raise money now. So what do you have on deposit and assets as the bank? Oh, well, we had the hypothecation money that we lost. We also utilized hypothecation, and now we're down to the bare minimums. We're down to the people that actually have less than 250 in their account. And we got to make sure that they're insured because that's a large depositor base at the bank. Okay, that's fair. And that's the case. So do we need to talk about it if you make more than 250K, or if you have more than 250K, how you're considered a sophisticated investor? This is how they tell you in front of your face that there's income levels to this. There's income levels to the information. What makes you think someone's going to have more than $250,000 knowing that this could happen? Are these risque banks? When you walk into the bank, you know it's risque. Hey, we got some wild assets. This is the moment where a bank gets bought out. That's all. A bank gets bought out. That's what happens. Maybe for the cheap. But once again, what happens to the people that have more than 250K in their account? Are they insured? Oh, no, no, no. That's what most people would like to think. Oh, did you have $1 million sitting in the account? So now you're telling me $750,000 just disappeared and you're only insured by the gov? When do you get the payout? How long is it gonna take for the payout for the insurance? Because was it a freeze on the bank? Was it a run on the bank? A run on the bank means, and we can go to the full definition from Investopedia, and you can go there as well yourself. But once again, a run on the bank is where the depositors say they lose confidence in the bank. We're paraphrasing. We didn't go definition. You can go. Once again, the run on the bank is where the depositors lose confidence in the bank and they start taking out their money. So once they start taking out their money, the bank is definitely losing a lot of money. The bank issued out mortgages off of hypothecation off of the depositors, right? A lot of situations can happen. What they say, we can't let the financial instability spill over, right? One company, maybe a few, they might hold enough mortgages that could demolish a city or a state because they have so many mortgages, and now they may, if they go bankrupt, what do you think the mortgages are going to be? Defunct. Might be good for some people in their thought process, but then it's clearly bad for the bank. So are they going to go under? No. The depositors just became their collateral. We need a loan. Maybe we'll pay it back. Maybe it's non-recourse. FDIC rule says, for the most part, we just got to look at the books, see what is non-recourse, which is 250K, because the Fed and the big boys are going to come in and they're going to wipe our butt. So those are hard numbers on the books, even though we have a bunch of unrealized gains. And the unrealized gains outweigh what we're insured for. So we're definitely underwater. We are definitely in a bankruptcy. We're definitely sitting here saying, out of this situation, are the CEOs and the board going to get a bonus? You would think that they wouldn't. You would only hope that they wouldn't. And we're not speaking this because these are the things that happen, ladies and gentlemen, when you pull in the seat. You think they're not going to interview the CEOs of these banks? Hey, come in here. Did you take a bonus? Hey, throughout that situation, were you still flying around in private jets? Were you still riding around in armored vehicles? Were you still riding around in diesel vehicles? Were you still utilizing company property? How much were you utilizing those things? At what point did you know you had a whole lot more unrealized gains than you had money? Sure, Congress may pull them in, but they've already shown that if they haven't shown, they'll show, hey, just insure us for this money. We've already gotten a 10 to 20% infusion back in our stock. 15 plus percent swings on these companies in days. You know how incredible that is for a company to move 15% in one day, 20% in a day? Oh, we got a capital infusion from what? The American companies that said they weren't going to. So maybe they weren't American, maybe they were international banking institutions that would like to claim more international jurisdiction. But we may have seen so as well some American institutions say we're going to put some money here, and they could have put it there as a loan. Whose money did they use again? The depositors, based off of hypothecation. Are you an investor after $250,000? Maybe you're just a depositor before 250, and now you're what? A sophisticated investor after 250. Dang, man, I gotta make sure the public school teaches that when you get to 250, there's different information. First of all, when you get there, they're not just gonna let you hang out to dry. As common conventional wisdom might make you think, oh, you don't want to get rich because when you get rich, you don't have the information. When you get rich, you got to get around the information. Well, $250,000 is also the suit. It used to be a very exclusive number, but it's more open now as a sophisticated investor. Even having savings of this and more, FDIC. Why do we need to know this as a people? It's like, why are you using Federal Reserve notes and you don't know it? They're telling you that there's rules to the money. Oh man, I want to watch this. I want to watch that. But are you going to read the FDIC rule for the 250 so you can know, okay, up until this point, this is pretty much how I'm about to play my life out. Everybody wants to be a millionaire. Isn't that the rule? Isn't that the saying? Isn't that the slogan? Isn't that the American dream? Everybody wants to be a millionaire at this point. Everybody is a millionaire at this point. Isn't that the game that people are looking to play? If you're going to win big, you're looking to be a millionaire. Or you're looking to at least make more than $250,000, which is a rule in place that says once you get to that level, there's information available for you that wasn't before you got to that level. Well, hold on, my banker didn't tell me that. Are you still acting like a depositor or are you acting like an investor? What's the public side? And they're insuring public money for 250, not private. So when you talk about the private family banking, you hear that? See how you have private family banking in conjunction with the FDIC? Oh man, I know about the premium finance. That's what they call it. They try to call it all these different things. Well, let's call it what it is. It's the 7702 policy. But oh no, no. Did they know that? No. They didn't know that because you're not talking to these people. But we talk to the people, whether they're doing the insurance for one long, one short, whatever it is. When it comes down to it, yes, there's an information gap. People say it's the haves and the haves nots. Well, we hear what it is, we see what it is. First generation wealth has to be very aware of this rule. Oh, we don't bury all of our assets. Asset protection is definitely going to come from when you separate them. So why would you have everything in one? Why do they have a rule in place then? What's the point of it? And just to let you all know, if you didn't know, the rule used to be for 150. Now it's 250. It used to be for 150. Now it's 250. That's where we are. They actually increased it because they want you to be sophisticated. You're either a depositor or an investor. You're investing your time or are you spending your money out of your deposit account, your checking account? Or are you investing and saying, no, it's an unrealized gain, like the bank? It's not a money game, but there are rules to the paper, and they have rules for them. When you can get your hands on a certain amount over a period of time, you become a sophisticated investor, not a depositor at the bank. This is something that maybe people might want to pin on their mirror so they can know. Until I reach this level, I am locked out of financial information and specifically private information. Think about it. It's private. They won't even tell you how to insure your money after 250. It's a conundrum. Oh man, if I have more than 250, it's uninsured. So what am I going to do? Have it at a whole bunch of different places? And then you hear about these athletes having 30 bank accounts and they're making millions. But what happened when you get in with a wealth manager, an institutional bank? So when you're institutional, what's the point of having the insurance? We might have it's no need to even have it when we're institutional. They got 250 billion under assets under management right there on their portfolio when you walk into the bank. So it's the private side of the bank. Oh man, where do I go? You go to the private side of the bank. You don't go to the public side. You don't worry about insurance anymore. Oh man, if I get in crypto, I'll make $150,000 and I make that 3, 4, 5 years in a row. I got it money. I got the money. So what happens? We thought you guys were on the private side of the bank with the crypto, but they're not. You want to know why? Because you're not in trust. We're going to go ahead and tell you that today. Oh, yeah. What, you think you're going to walk over to the private side with it in your name? KYC? International jurisdictions? We've already seen the fallouts, and it's happening. Whether we see any more ripple effect in this water, maybe. Maybe we see more ripple effect in the water. Maybe, we've seen one Chashki go under, one debacle go under, which was a crypto exchange based whole internet website scam. Next, we're going to, which is the new bank, the newer some of the banks that they've been around. We don't know how long these banks have been around, but they're fairly around, and most people wouldn't say that they have a deposit there. But once again, these are investment institutions, and once again, yes, after $250,000, there is definitely a different type of what you call insurance, and once again, that's on the private side, and they're not walking in there with even public entities all the time. But these guys are very aware of it. They're very aware of what you're coming in there with. And if you're coming in there with it in your name, to the private wealth management side, you look like an unsophisticated investor. Oh, we got you. We'll put you in a good position. The bank. And then they're managing your wealth. Right? The bank's managing your wealth after 250. If you're not sophisticated, if you're not in the right type of position, if you're not aware of what's supposed to come next after 250. Once you get aware of what comes after 250, you walk into that room with confidence. You walk into that room knowing what service you're about to be provided, because you're not just a depositor now. You're a sophisticated what? Investor. Appreciate everybody for tuning in live, listen, replay. Always appreciate everybody for tuning in live, listen, replay. This is the Vault, episode 250. Actually, it's 472. FDIC 250K rule for depositors equals investors. Definitely want to do this episode because we see what's going on out here right now. We hear these so-called banks may go under, it may have a ripple effect. The media is painting a negative picture towards you. You might be a little scared. You might don't know if it's going to spill over to your bank. It probably won't. And so people are is there confidence in the market? Is there a banking quote unquote crisis? We don't see the so-called, credit default swaps that they had for mortgages. So we don't really see that as the underbelly of this downturn for some of those banks. But nevertheless, we're happy to just speak about it and talk about it with people because, this is once again those episodes where you get the jewels and conversation about these things that you may or may not be having with friends or family and associates, which is the 250K rule. Because there are quite a few people that reach out to the vault all the time, and they definitely have more than that. And they reach out, and they definitely are not aware of how to walk into that private side. And most of the time, you're not going to walk into that private side if you're not in the right position. So once you're in the right position, when you go through trustee training, Christian at trustchristian.com. Once again, that's Christian at trustchristian.com. You'll definitely see, okay, we're walking into the private side with confidence. And you know you're not unconfident about what happens after 250. Simple. We know what happens after 250. You think who doesn't want to be a multimillionaire? If you want to be a multimillionaire, they clearly told you right when you sign in a paper in a public institution, 250K rule. Well, let's go over now to the private wealth management side. So are these smaller banks that are only insuring smaller people? So they have to come in and have this rule put in place for them, not just for that bank, but all banks, but the institution and the implementation of the rule. Hmm. We'll see. Christian at trustchristian.com. Appreciate everybody for tuning in live, listen, replay. Feel free to hit the like and the subscribe button so we can, continue to grow the channel. Christian at trustchristian.com. Peace and joy.